Hello and welcome to this video where we're going to be preparing a statement of cash flows. On the screen you'll see what you should be seeing on your handout, which is comparative balance sheets for Paget Company for 2015 and 2014. Alright, so the first thing we're going to want to do is take a look to see what happened to cash this year. Alright, I'm going to highlight cash because the change in cash is where we want to end up at the end of our statement. Up here we're going to write increase, decrease. And then let's find the change in all of our balance sheet accounts for the year. Okay. I'm going to unhighlight those. Okay, so $46,000 is our increase in cash for the year, and that's the number that we want to end up with at the bottom of our statement. All right, let's start like we always do with the heading. All right, now first thing we want to do, we want to find operating activities. Recall that the first thing that you do with operating activities is you look for net income. All right, and then we're going to adjust our net income for all of the items that affect net income and cash differently. All right, so in this case, we don't have an income statement, but they do tell us down here that net income was $93,000. Okay, I'm going to make everything that we've looked at yellow, so this way we know that we don't have to look at it again. All right, so net income, $93,000. Now we're going to say adjustments to convert net income to cash. And remember, the first thing we're going to look for, depreciation, amortization, gains and losses. All right, so here they tell us depreciation expense was $34,000. And if you have no sales of depreciable assets, your depreciation expense is going to be equal to the change in accumulated depreciation, and that's the case here. Let me repeat that because that's important. If there were no sales of depreciable assets, we did not sell any equipment this year, notice, then you can use the change in your accumulated depreciation as your depreciation expense. Okay, so I'm going to make this equal to negative this number because we know we need to add depreciation expense back. It is a non-cash expense. It reduced our net income, but it's not reducing our cash. All right, next we're going to take a look at our current assets and current liabilities. Accounts receivable went up this year. And remember, we do the opposite of the change, so we're going to make this equal to negative $12,000. I'm going to highlight that, which tells us that we took care of that and we don't have to look at it anymore. When we're all done, we should have looked at every balance sheet account to see what happened, okay, and how it should be accounted for on our statement of cash flows. All right, next thing that happened, inventory went down. Again, we do the opposite of the change, so we're going to say equals a minus 22,000. And I'm going to highlight that. All right, land is our next asset, and that is not a current asset. So now we're going to go down here and we're going to look for current liabilities. All right, the only current liability we have is accounts payable. And what happened to accounts payable? It went down. And this one, remember, with current liabilities, you do the same as the change. So we're just going to say equal to that. And we're going to highlight that so we know that we took care of our accounts payable. Okay, we're going to add all these up, and this is going to give us the net cash provided by operating activities. And that is simply the sum of all of those numbers. Okay, so we have 133,000. Next, we're going to take a look at investing activities. Basically, what we're doing is we're going to work our way down the balance sheet now. Investing activities are anything having to do with non-current assets. So we're going to be looking at the top part of our balance sheet here, and also the extra information that they give us down there. So we see that land went down by $20,000, and they tell us land was sold for its book value. So let's call this sale of land. And again, it's going to be the opposite, a minus of that, right? Because when you sell land, money comes into the company, so that's a source of cash. And then what happens, so let's also highlight this so we know we took care of that. It tells us no equipment was sold during 2015, but we do see that our equipment went up by $60,000. So that must mean that we purchased some equipment. And when you purchase equipment that uses cash, that makes your cash go down. Okay, when you're done with your investing section, you should be done with all of the assets, okay? And you can see here that we took a look at all of the assets now, and we're all done with our investing activities. Notice that we have a negative number here. We're going to call this net cash used by investing activities. And last, we're going to do financing activities. Those are all going to be involving items on the second half of our balance sheet, the bottom half. Going to highlight the no equipment was sold, so we know that that's done. All right, so we have three things to look at here: bonds payable, common stock, and retained earnings, and we have additional information for all of them. First thing that we know is that bonds payable amounting to $50,000 were redeemed for cash. So let's put redemption. That's just a fancy way of saying that they paid them off. Okay, so you say redemption, sometimes they say retirement, sometimes you just say they repaid it, but it's all the same. All right, we repaid bonds. That means that we paid off a debt that uses money. Okay, so that means it's a use of cash. All right. Next thing we're going to take a look at is common stock. We see our common stock went up by $42,000, and it tells us common stock was issued for $42,000 in cash. So here we're going to have issuance of common stock. $42,000. All right, the last thing we're going to look at is retained earnings. And what are the two things that we know that affect retained earnings? We know that net income increases our retained earnings, and we know that dividends decrease our retained earnings. All right, so the difference in retained earnings is because retained earnings went up by $93,000, and then we took out the cash dividends of $39,000. So down here we're going to say payment of cash dividends. And that's minus $39,000. Okay, and that will account for all of the changes in our retained earnings. If you wanted to double check, you could do a little T account, take your beginning balance, your 138, add your 93, subtract the 39, and you should come to 192. All right, so this is going to be net cash used by financing activities. I'm going to add up these three. And then finally we have net increase in cash. Your net increase in cash is equal to operating plus investing plus financing. Oh, let me do that again because I need a little more space here. Okay, I'm just going to do a sum, but you see that it's operating plus investing plus financing, so we have 46,000. Okay, so we're happy about that because that matches the 46,000 that we saw before. Okay, we know the increase in cash has to be equal to 46,000. All right, and then we're going to put cash balance at the beginning of the year and cash balance at the end of the year. And these come directly from the balance sheet. Okay, and the $46,000 increase plus the beginning balance gives you the ending balance. Okay, so that's the end of our statement of cash flows. I hope you find it helpful in your studies.